What's up, Keller Williams Realty Partners, coming to you with video 2 of the contract to close phase for the buyer's point of view. And I want to talk about the loan. One of the biggest aspects of the purchase and sale agreement, getting that done on time, is the loan. And I will tell you, I've been in this business over 20 years, either on the loan side or on the real estate side or both. And I can tell you that nothing will wreck your deal faster than either a bad loan officer or a buyer that is either dishonest or does some silly things throughout the process of the loan. Okay, to the extent that you're able, you want your buyers to use our guys over at Supreme Lending, or at the very least a lender that you've used before, because if they're going with somebody else you're not familiar with, they may be just fine, but a bad lender, a bad loan company will wreck your deal really fast. So we have to be careful. And again, this is from the perspective of me talking to a potential buyer. Hopefully by this point you've got a buyer brokerage agreement sold and we're getting this person pre-approved. But what I like to tell my buyers is this: please have a detailed conversation with your loan officer and make sure you have an idea of your estimated cost to close, interest rate, and payment. I can't tell you how many times people get a pre-approval letter without going over all this. It is typical for closing costs to be 2 to 3% of the purchase price. So a buyer that's a first-time buyer in particular may not know this. A lot of people who've bought multiple houses before don't know this. I remember not having this conversation with a buyer of mine who was on his 4th house. But every other house he bought new construction, and almost all of his closing costs were paid for by the builder. So he didn't know anything about closing costs, and it was my fault. And I was a newer agent, but it was my fault for not bringing that up to him. Now, it's a good idea, though, to have, you don't want to be responsible for lender information. You want to have a good idea about, for example, the amount of money you can ask for in closing costs for a particular loan product. And you want to know the basics, but you want to let the lender be responsible for what the lender is responsible for. So always send your buyer back to the loan officer when questions come up about closing costs, interest rates, cash to close, and things like that. And back to the reading, every figure will be an estimate, as there are several factors out of the loan officer's hands, like the homeowner's insurance rates, property taxes, and other factors. Now, their fees, they can't, those are supposed to be set from what's called the loan estimate. Okay, but they have no idea at the beginning whether or not the homeowner's insurance is going to be expensive or more moderate or whatever. Property taxes are out of their hands too. I always like to tell people to figure about 1 to 1.15% of the purchase price for property taxes. It's also very, very important for your buyers to get their homeowner's quote within the due diligence period, because sometimes there's a problem with the house. Sometimes there's something that we just did not see, that we couldn't possibly know. So you want to get insurance checked out early. Okay. Please direct any and all closing cost, interest rate, final closing numbers, payment amounts, and final loan approval questions to your loan officer. Again, you as the buyer's agent don't want to be responsible for that. You want to have just enough knowledge to make yourself dangerous and make yourself useful to your client, but you want that loan officer to be responsible for that. And then back to the reading, I will be happy to assist and advise where I can, but your lender has significantly more info than I do about these matters, and he or she is the ultimate authority and expert. Even though we have a pre-approval letter, your loan is not fully approved yet. So that's very important to let the buyer know that, particularly if they go out and do something silly with their credit, that they could get declined, or the loan could get delayed. All buyers have to go through the underwriting process, so we will not be fully approved until just days before closing. Typically, we are getting that clear to close a little bit sooner, but again, and I'm going to mention some of this more in the video, they are going to verify employment at the very end. They're going to verify credit. They're going to make sure that you haven't done anything silly as the buyer. Your lender will be in touch with you soon to collect more documents. Now, this is the important part they need to see. Throughout the entirety of the loan process, your lender may and almost certainly will ask for items, paperwork, and explanations that may seem excessive. Please be patient with the process as it can get frustrating. This is an almost surety with every loan that's going to take place. They were going to ask you probably for something that you think as a buyer is very silly. Now, you as the buyer's agent aren't responsible for this, but it's probably a good idea for you to let them know. There was a joke we used to tell when I was a lender that at some point in this process, you're going to be upset with me because I'm going to ask you for this and ask you for that. Again, it's very, very silly sometimes, but it's necessary. This will be the case no matter who your lender is, as they all have to abide by the same rules. This is almost certainly always the case. All lenders are dealing with and required to adhere to federal loan regulations. I would say 95 out of 100 loans are going to be backed in some way by the federal government. We have to follow their rules. Believe me, as a lender myself, back to the reading. Believe me, as a lender myself, the last thing your loan officer wants to do is harass you for documents and explanations. But unfortunately, if your lender asks you for something, it is because he or she is required to, and they have to have it. I promise you that loan officer does not want to hound you for documents. They're not making stuff up. The underwriter is making them do it. Their boss is making them do it. Make sure that your buyer knows that, look, they have, if they're asking for it, they have to have it. And I would just add to this, as someone who's done this for a living before, I'll just give you an example from my experience. I had a buyer one time who was getting gift funds from his father. And the loan officer told him, said, look, here's what we have to do. We have to transfer the money from your father's account to your account. We have to have bank statements showing that it came from his account and it went into your account. And we have to offer an explanation. And my buyer was very hard-headed and he just wasn't going to do it that way. So he decided to get cash from his dad and deposit it into his account. Well, I can tell you this now, that caused a huge problem. Number one, we almost didn't close because of it. And secondly, it ended up delaying the closing for several days, which he was not happy about. But we told the buyer, or say we, the lender, the loan officer told the buyer what to do and he didn't do it. Now, my experience with this is that some buyers think, and I understand this, they think that if a rule is silly or a regulation is silly, they don't have to follow it. But it's only going to hurt you as the agent, but more importantly, it's only going to hurt the buyer when they do things like that, because there is no wiggle room on a lot of this stuff. So it's very important that they do what is asked of them. And the other thing I just want to mention that's not in here is it's very important for the buyer not to make any purchases, large, small, whatever, on their credit. Now, if they're going to go out and buy groceries with a credit card, that's one thing, but I can't tell you how many times I have seen this in my career where somebody went out and bought something like furniture. I've had somebody buy a car before. I mean, it will wreck the deal in a hurry. So they need to be careful, and a good loan officer will have that conversation with them. Back to the reading. The funds you need to close your loan will be verified and sourced by your loan officer. So we've talked about that a little bit. At least several days before closing. The faster you're able to get him or her documents and statements, the better. And again, this is talking to the buyer here. Again, when the loan officer asks you for something, he or she has to have it, and it's always best to get it to him as soon as humanly possible. Your lender will also re-pull credit and verify employment right before closing. I would suggest to any buyer who has a HR department that's hard to get in touch with to give them a heads up that someone will be reaching out. As I mentioned before, this may get frustrating, but know that our ultimate goal is to get you into the home you deserve. I'll give you this one last analogy. I got married, over 20 years ago. The day of the wedding was a complete zoo. The tuxedos didn't come in right. There was a problem with the church. A few other things went on, and it was a nightmare the day of. But at the end of that day, I was married, which was my ultimate goal. In this case, the ultimate goal is to get you into a property, and sometimes it's the buyer's fault, but sometimes things happen which make things very, very stressful and bring up a level of anxiety toward the end that's just really high. But again, the ultimate goal is to get that buyer into the house they deserve. And one of the things you may have to do as a buyer's agent throughout this process is coach your buyers that to trust the process, and particularly when it comes to having to turn in documentation they think is silly. So thanks for listening, and we'll talk to you in the next video.